Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. Sorry I'm a little bit late today, but had trouble opening up Rhythmic, and that put me overall behind. So we are coming in here to some numbers. Treasuries are down from the numbers, and what did we get? Well, we got retail sales, or retail sales, in line with the forecast at spot 3 versus an expected spot 3. But the headline retail sales, spot 2 versus an expected spot 6. So that's interesting. And then we also got Empire State Manufacturing Index, -20 versus an expected -1.9. So those are all numbers worse than expected, but the treasuries are actually down. S&P 500 is running up and the treasuries are down. So it kind of seems to me that once again, the flows coming from the dollar and correlations with ES are pushing things more than the flow that you're getting directly in the treasuries. Because wouldn't all of that information suggest that interest rates are going to come down? This is very interesting. Let's come and check out the charts, see what we got going on here. Okay, we do have some rollovers. Make sure we get this over here. Oh yes, and make sure that we turn on our robot. Took some more trades the other day, and one of them was a loser. So I think if you come to the account, well, some of these losses was from some other test a long time ago, but I think that it gave up most of its profits in that one bad trade. I digress. Here we are in the treasuries. So not too much of a move from Friday, but we are pushing the downside here. S&P 500 did really good on Friday, and it's on the up again today. Oil, maybe trying to dig something out there. Gold and silver, well, gold was above 3,000. They're having trouble holding it, but we're just below it, so, you know, that's cool. Silver, a little bit more of a pullback. Copper, kind of showing similar as well. Interesting. And here is the dollar. So again, last week, at the beginning of the week, we had a huge decline in the dollar. And, you know, when you look at the trends, they are still to the downside. Ooh. You see it. The treasury is pushing a new low there. And then we got Bitcoin. Bitcoin's still just kind of middling under 8,500 here. So I don't think that was like a new low, but they just pushed through a lot. Interesting. Okay, so we got some volume on both sides here. I mean, I think that just based on the news, that should be a buy. But I don't know. I'm not going to you know, trade against it or anything. Wrong way. I think I'll just leave the camera like that. It's fine. Hmm. I'm trying to find a better explanation for why the treasuries are doing what they're doing. There might be some underlying information in that retail sales report that's bad. Trump declares Biden's auto pen signed pardons void. Oh boy. Futures fall after percent says not worried about a slide in U.S. stocks. There's not that big of a slide in stocks today, though. I mean, and we're at the highs of the session, so. Dollar in bear trap may spring higher this week. Okay. Forever 21 files bankruptcy for second time? Really? There's two stories here on Zero Hedge about the dollar. The bear case, consumers reduce their spending, causing a recession. I think that's a very strong risk. But not a whole lot on the retail sales yet. They did push a little bit lower. Although cumulative delta here is pretty choppy. So it seems to me we've got a really strong flow short. We do have some people trying to fight it and losing. But you can see there, as the S&P 500 breaks highs, that the treasuries continue to push lower. I guess the Trump administration needs to whip the economy harder. I don't know. I'm a little bit surprised by this move, man. Good morning, Uzi. I mean, at this point, this isn't just like, oh, okay, this has moved a little bit further than I thought on the news. This is turning into an outright bloodbath. There was another good 5,000 contracts, no, 10,000 contracts on this latest little push from 16. Yeah. The Japanese yen is getting absolutely creamed, and the dollar is skyrocketing higher. What is it about the retail sales that suggests that? Oh, here's an interesting post from. We haven't talked about Jim Miorio for a while. In Trump's first term, 9% of the jobs added were government. 9%, that seems high. In Biden's term, that number increased to 31%. In the same time, we added over $8 trillion in national debt. We mortgaged future economic growth for the illusion of short-term strength is just math. Consumers have been cutting back on their discretionary purchases over the last 3 months. Restaurant sales have collapsed 8.5% at an annual rate. The consensus miss on retail sales was an online shopping story this month, as it was last month. Outside of that, conditions weak. Okay, well, we got the biggest pullback of this thing yet. I think we got to keep an eye on this. This seems like a prime situation for a strong trade the other way. Still don't understand why the camera seems... That looks better. Trade the other way meaning what? Okay, so... Man, I just had this thought in my head. I was like, oh, I told myself I wasn't going to go into these, but we're going to go into it because you asked the question. If we have a meta order going this way, right? And then normally there is a post meta order, mean reversion period. But if somebody comes in with an opposite and equal large meta order, the impact of this meta order will be greater because of the damage to liquidity behind this first meta order. So we have to keep an eye out for if we start to see aggressive buyers in this location. Because those buyers will probably have more impact. And you can see there's been signs, there's been volume fighting it the whole way. There's this big volume down here. We're still seeing orders hit at 16. It's not a big enough imbalance to push it up, but there's just kind of a hint in this that not everybody agrees with the way this moved. Yeah, ZB's low on that push isn't exactly super strong. That's true as well. I would say that it was pretty strong in ZN though, which probably matters more. There's got to be more to it. There's got to be more to the number. Maybe it's revisions. After the colossal disappointment last month, which Bank of America's omniscient analysts forewarned, February's, so for retail sales, Bank of America's analysis is always spot on. because they use like credit card data. Okay, February's consensus expects a considerable rebound in retail sales following last month's 0.9% month-over-month plunge, which was revised down a 1.2% month-over-month drop. February saw retail sales disappoint, rising just spot 2 month-over-month versus the spot 6 month-over-month expected. Food, services, and gas stations saw the biggest drop in nominal sales, the biggest drop in food services spending in 2 years. Core retail sales met expectations, but also saw downward revisions. On a non-seasonally adjusted basis, retail sales are actually down year over year. Adjusted roughly for inflation, real retail sales is basically flat year over year. Finally, on the bright side, Retail Sales Control Group, which is used for GDP calculations, surged negative 1% month over month in February, more than double the 0.4% rise expected, after puking a revised lower 1% month over month in January. So, while headline sentiment may be weak, this is a solid report for signaling economic growth. Wait, what? The Retail Sales Control Group surged 1% in February, more than double the 0.4% rise expected after puking a revised lower 1% month over month in January. So it could be that. I don't know. This is very odd. It just all sounds very contradictory. I don't think I've seen an economic report that I felt I didn't understand so much in a while. Trump learning from Biden in January revised much lower, means lower base and can beat estimates. I don't know. Over here in the treasuries, I kind of feel like that we're past the point where you would see like that large meta order buying. I think that there was a little bit of an attempt, but it didn't follow through. So now I think they were probably going to get stuck somewhere in here around 16. I've never seen so many people in February at the mall. I mean, the issue that I see, though, is I think that Americans, by and large, are doing well, but there are small pockets of significant weakness, right? Like, one of them is that spending overall is lower because Democrat sentiment is so bad. But, again, like, they're actually doing okay, most of them. So, like, this idea that, like, the sentiment matters more because it's forward-looking, because that tends to result itself to be like self-fulfilling. I'm not so sure if that's the case if people are actually doing well, right? Then there's, there's still a white-collar recession. The people that are out of jobs is just absolutely brutal. So, and, it seems like most of the reports that come out seem to reinforce that. But this one, the Treasury selling and selling by so much, does not really make sense to me. But I guess that does only bring us to 4.3% on the 10 years, so... I'm curious to know if this AutoPen's news story actually has legs. It sounds too fantastical to check, you know? Like, that all of those pardons would be declared null and void would be wild. Romania bars another nationalist from presidential race for opposing the EU and NATO. It is absolutely bonkers to me that they can do that. I would say the fact that it happened in... Yes. Oh yeah. I don't think there's any doubt that it happened. I don't know if anybody's actually questioning that part, are they? The question is, can you declare... Is it null and void if it was signed by an auto pen? Because, I mean, presidents have been using auto pen for a long time, right? Those on the unselect committee who destroyed and deleted all evidence obtained during their 2-year witch hunt of me and many other innocent people should fully understand that they are subject to investigation at the highest level. The fact is, they were probably responsible for the documents that were signed on their behalf without the knowledge or consent of the worst president in the history of the country. Trump told reporters aboard Air Force One last night, "It's not my decision. That'll be up to a court, but I would say that they're null and void because I'm sure Biden didn't have any idea it was taking place, and somebody was using an auto pen to sign off on and to give pardons." I kind of think that all you would have to do is have Joe Biden get up and testify and say, "Oh yeah, I knew about it. I authorized it." And that would be the end of it, you know? So that's where, like, Zero Hedge has it as the top story and everything, but I'm kind of like, feel like it's not, it doesn't have legs. Yeah, easy peasy, even if it were a lie. Yeah, exactly. Still, it's interesting because some people are starting to... Because, I mean, this has been going on for, like, more than a week, right? So it's curious that all of a sudden, a bunch of people, including the administration, do think that it is a story with legs. So many of the news stories that I see these days are like, this is not real news. It's just clickbait. French Parliament member wants U.S. to return Statue of Liberty. Apparently you despise it. Okay. That's just a clickbait story, right? It's not a real story. But then again, I feel like that Donald Trump wants Canada to become the 51st state is also not a real story, but apparently everybody in Canada is super triggered by it. The cool part about government and politicians is the line for doing whatever you want is so far beyond what it is for normal people because you have to prove things, and the government has an incentive to not prove itself as being this massive clusterfuck. I don't know, man. I think that in a lot of corporations that you can get away with just as much. Especially if you are in any kind of position of power. Bondi needs to quadruple her staff. Well, one of the things that kind of bothers me is that, you know, like, I would really like to see the FTC go after more people. Go after some of these scammers and stuff. It's super, makes me mad. Maybe that's just the ADHD justice sensitivity, but it just makes me so mad that we have all of these gurus in the day trading space that even after they've been prosecuted in some instances, they're still able to find an audience and fool people. It's just so absolutely nuts. And I really want to see the FTC go after these people in a real way, you know? All the damage to legitimacy gets mitigated out. That's why media is stacked with spooks. No, I think that the media is stacked with spooks because liberal-minded people were significantly more likely to want to go into journalism. Another thing you have to prove? Oh, I mean, how do you have to prove that? Like, isn't it like a well-known cultural thing? Like, how else would it have happened? I kind of think it kind of gets in my mind chalked up to another example of the inherent contradictions that come about as a result of the liberal party becoming the establishment, right? Because liberalism, well, and like when I talk about like liberalism in this case, I'm even kind of talking about classic liberalism. Classic liberalism is like inherently left wing. It is about like a change. It is a change that, or like when we invented the terms left wing and right wing, it was to describe these people that on the left that were liberal essentially, and they won. They were correct. They were correct, and modern society is largely patterned off of their ideas. And there's kind of this issue, though, when you start to assume that they are still anti-establishment because they are the establishment now. And it's kind of weird. Well, it's not weird, but I guess that's the explanation for why it took so long for people to realize that the left controls all of the institutions. You know, I remember Rush Limbaugh talking about this shit when I was like 5 years old. And it's funny that it's taken like 30 years for people to figure it out. I'm not talking about left or right. I'm talking about people with a vested interest in emphasizing the legitimacy of the U.S. government, no matter however staggeringly retarded it becomes. Well, but so left-wing people are more likely to become reporters. Left-wing people are more likely to emphasize the legitimacy of the U.S. government because left-wing people have controlled the government for like 50, 70 years, something like that. And then on top of that, the government provides very strong incentives for the media to report things the way that they want. Establishment Republicans are also thinking, well, yeah, it's because then it's like if you're out of power, one way of coping with that is to just kind of side with the establishment, even though you're from the other party. Yeah. But by and large, I would argue that when it comes to like establishment Republicans, that is largely about defense spending. So actually, when you think about it, it's kind of crazy how much of this actually has to do with defense spending, huh? Okay, the treasuries are coming back here. I would say it's a little bit mixed still, but we have recovered that last 10,000 contracts back to 20, which is about when that impulse started anyways. So unclear to me whether or not we will cross the divide here. Here is the inventory cost basis. So if I had a position, I would probably be taking the profits there, even though it does look like it's crossed the line, and we'll see. Then the next step would be at 22. It's funny because it's kind of comes back to George Bush, but then it kind of doesn't, huh? Because Republicans were kind of traditionally more the anti-war ones, right? And then, you know, well, okay, so Republicans were anti-war before World War II, right? And then after World War II, pretty much everybody was pro-World War II. And then, you know, like we had Eisenhower, he was a Republican, right? But then I wouldn't say that there was like a huge difference between Republicans and Democrats on the issue of war until the Nixon era. And, you know, I don't know if I could categorize Nixon as pro-war or anti-war. He kind of said, well, I'm going to end the war. And he kind of did. Although I don't think very effectively, but I digress. And then, I guess Reagan, you'd call him anti-war. But then you get to George Bush, and then George Bush, it became Republicans all of a sudden were very, very pro-war, which is where this whole neoconservatives idea comes from. This is like they're conservative, except for that they are all about getting in foreign entanglements and yada, yada, yada. And then after George Bush left, Republicans went back to like what I would consider their traditional position, which is we'd rather not get involved in things if we can help it. But it's a good portion of the Republican Party that is still that neocon wing. And those are largely the establishment Republicans. There's maybe some other establishment Republicans that are like, you know, oh no, like our institutions are all very good. You can't bad talk any kind of government agency or anything like that. But I feel pretty confident that after this whole U.S. aid thing and everything else that's been going on with Doge, that those kind of Republicans don't exist anymore. Or that the few that do exist are going to retire. I'm trying to game out in my head right now what kind of narrative we might get out of the administration today on the economy. Donald Trump's going to say anything that roils markets and yada, yada, yada. The both the day trading subreddit and the futures trading subreddit, I feel, are not moderated very well. If I was in charge of a subreddit like that, my rule would be mentioning a guru gets you banned. That would be my rule, including if you mention speculator Seth. All arguments should be about the or all information posted should be about the idea itself and not where it came from. ICT was claiming he was gone. So the thing that's really irking me now is that I see astroturfing in favor of Ross Cameron. Like, you would mention his name on Reddit and it just massive downvotes every time. And now every week, yeah, the Warrior Trading guy. And now every week I will see a thread where they just happen to innocently mention him, and then there will be like 60 comments. All of these positive comments about the guy from relatively new accounts. And like the thread overall won't be upvoted. Like there will be a high controversy, but it will still be enough to like show up for everybody. There was a point when he was all in the suggested feeds advertisements and stuff. That might have more to do with your own interaction. So I find it super bizarre. If I start interacting with somebody in the day trading space, on TikTok or YouTube, and the way that they both do it is a little bit different, but like who it starts to show me. Because like TikTok in particular will be like, oh, you like this guy? Well, then we think that you're going to like this guy and this guy. And it's always trash. It's always trash. And I'm sitting here like, why am I not the one that gets recommended? Why does the algorithm hate me so much? I don't interact anywhere but here, but I only use my PC for trading, so the content of the ads makes sense. But him specifically, I haven't seen much of, yeah. But I guess I'm saying on YouTube, like if I went to his channel once, then all of a sudden YouTube will start being like, oh, maybe we should recommend this to you. And like the thing is, okay, so like I have a separate account, right? For like I do my regular YouTube viewing on a different account from my Speculator Seth account. And it will recommend to me my videos. Oh, you know what it is? One of the things that really bothers me. It actually kind of makes me think about maybe the right thing to do is to hide the streams afterwards, simply so that the algorithm doesn't recommend them. I kind of wonder if keeping the streams listed hurts the channel. Because I think that what the YouTube algorithm does is it says, okay, we think that you might like this creator, so we're going to start showing you videos about this guy, or from this channel rather. and it will pick a video, and basically for my channel, it will pick one of the recorded live streams instead of the full-on videos. It's like all the ITC stuff. Well, yeah, because ICT and his flying monkeys. Because ultimately, at the end of the day, you have to understand that ICT is a narcissist. It's a chronic narcissist, and the people that are following him are flying monkeys, which is what they kind of call the people that assist the narcissist. And they were going around and just plastering the internet with him, and that's how he became popular. If you guys all went and plastered my name around everywhere the way that those guys did, we would probably be top of the game. He's a level... No, I mean, he's like probably could go and get diagnosed with narcissistic personality disorder. Like, it's really bad. It's really bad. He's not just like some guy that's really absorbed with himself because he's on the internet or something like that. No, he's the kind of narcissist that really is scary. The kind of narcissist that really causes him to start saying and doing really, really crazy things. And it's really, really crazy to me that there are groups of people out there that are attracted to that for some reason. Makes no sense. Lives hurting your YouTube channel is a myth from the algorithm's point of view. I really think that it's different though. I don't know. More broadly, I guess I'm just frustrated that I've made a ton of content in the past 6 months and it hasn't really done anything for the channel. And some of those videos did really well. So I feel like that 6 months should be enough to see a difference, you know? It seems like that shorts can help the channel. Like, if I look at audience, subscribers, yeah, well, even with that. Yeah, I guess when we started posting a lot more content, that it did increase subscribers. Oh, no. That's it. Switch back to the viewers. And that's going to be coming from the shorts. No, like the number of subscribers is consistent too. Yeah. Very frustrating. So we're going to do a poll today. We should do the poll because I feel that I've put a lot of work trying to get like a video out almost every week now. And it's not accomplishing anything. And I am now beyond, well, next week would be my last jobless claims. So, you know, it's like 6 months of that. I'm not sure I can justify continuing to do it. Which kind of doesn't make sense because like posting new content should be the thing that helps the most, right? But I guess if I can't, well, I'll still post content just maybe like once a month, not every week, right? But I guess in some respects it's giving up on the YouTube channel overall. But I don't know what else to do. So it's kind of like maybe there are some other things that I should be doing with the free time. So what should we be doing with the free time? Engage with your audience, start a poll. What project should we work on next? Machine learning integration with Ninja. Oh, I can't I'm limited on how many characters I get. Ninja Trader machine learning. Build our own platform. You tried talking to someone who's like a well, I've never like not like a one-on-one thing, but I certainly watch a lot of content on that sort of stuff.
Order filled.
CTA stuff and okay, so that triggered the algo. I think you have so much good time. I do too. Again, it's like it's perplexing to me that I have the best content on trading by far, and you know, for a long time, for years, and YouTube doesn't agree. It really seems to me like YouTube doesn't want me to make content. I just don't. There's no other way of putting how I feel right now. It's like I put a good 6 months into putting out a ton of videos, including videos that I thought would do well in the algorithm. And it's still just the same thing. It's just like, even if a video does do well, it's like a brief thing and then it dies out and it doesn't help the channel at all. I used to think, oh, well, maybe my account is throttled in some way, but I don't think that that's the case. Because I do get it recommended on my other accounts and stuff, so. does show it to some people. It's just it's not attractive enough. It's like in order for your channel to take off in the algorithm, your channel has to be here, and I'm here, even if that's like the best content. I don't know. Because like it's not attractive enough, like compared to videos, like, because I think that what it does is it says, okay, here's all of the people in the trading space. This person is interested in day trading. I'm going to choose who to show to them. And who is it going to choose to show to them? It's going to rank them all. And I'm going to be way down here because I'm not making all of these excessive promises to people and acting like I'm a millionaire from it and all these sorts of things, right? So the algorithm doesn't pick it. I basically can't compete with the narcissists and the fraudsters. Okay, starting a poll. People want charts and fair. Well, people want tools that are free, essentially, right? Most of them are going to use so like, just as an example, the number of people out there using NinjaTrader is probably dwarfed by the number of people using TradingView. Why? Because TradingView is free, right? And honestly, NinjaTrader only does as well as it does because it has like a free version. If there wasn't a free version of NinjaTrader, probably wouldn't be nearly as popular. Only gives you two indicators. Yeah, I know. Like trading for trading futures, TradingView is like completely inadequate, the free version. It's just, but I'm just saying, like, the reason that retail traders adopt the strategies and the instruments and the things that they do, largely because of lack of funds. Which means that they tend to be herded into strategies that rely exclusively on a price chart because they can't afford anything else. Like one of the options should... No, I mean, I'm just not... Yeah, Jigsaw costs $500 base, and then between the live license and the data, you're probably $70 a month, probably. Yeah. We're the ones that are taking it very, very seriously, and most retail traders don't realize. I think the live licensing is kind of bullshit. I don't know, man. I like thinking of it from the perspective of like, how much money am I bringing in every month, right? It kind of seems to me that the business model wouldn't work very well without having monthly income like that. I guess the thing that's questionable is having both an initial license and a live license. But that's the thing that Jigsaw does that's kind of different from everybody else. Because NinjaTrader, it's all up front. And Sierra charts, it's all monthly. But Jigsaw does half and half. But I don't know. It probably dissuades a section of audience that they probably don't want anyways. Would you be open to inviting someone to your channel? You know, maybe. I don't know if people want to get on live and stuff, but I guess when I'm talking about this, I'm really talking about like do I want to describe it this way? Yeah. Basically, what I'm saying is I think that I'm going to spend less time making content and more time making things. So like if we do NinjaTrader machine learning, that means I might be sitting here off screen programming stuff, and I'll show it to you after I'm done programming it. Maybe after we've learned a bunch of stuff about it, we might make some machine learning content, but the overall thing here is that if these last two videos don't make some sort of significant change to the channel, I am going to spend less time making content. You should fine-tune the exits for the bot. The entry was dead on. Well, but not really, though. I don't know. Like, the thing that you're going to find with the robot is that it has a tendency to get into a liquidity hole, right? It gets into a liquidity hole. Maybe you can optimize the entries a little bit. But the reason it works is because it holds it for an hour, and the meta order tends to still be running an hour from now. That's all. So I think to really make this like a really strong, viable strategy, we need to have more than that, you know? Like something that says, okay, I think that there is imbalance long, and I want to get in when it's actually at 50, you know? Or like I could do this sort of thing where it's like, there is an imbalance. Like we did hit imbalance of 57.5, but I'm not going to get in there. I'm just going to trigger to start looking to get in, but I'm going to wait until the order imbalances come back to 50% or something like that. Should be optional, like just pay monthly to access analytics and stuff, but just to trade. Well, and I think that $50 just to trade for most retail traders is excessive, especially if they're trading micro futures. Like maybe have I tried to convince them to do a different license for people trading micros, because it does seem to me that like the $50 a month is kind of like the biggest barrier for people. But whatever. But anyways, so the projects that I've got here are, we could spend more time testing CTA strategies in Python. We could build our own platform in Rust from scratch, or we can set NinjaTrader up to connect to a server on the machine that's running machine learning stuff. Okay, integrate machine learning with NinjaTrader. So those are the options that you can vote on in the poll. . Well, and they came back a little bit, so the robot is losing. That's not too much, though. 3 ticks. So if you show a profitable bot running live, you'll get more viewers. Well, I'm never going to sit down and say, oh, it's a profitable bot, right? Even if it was. It's turning around. The S&P 500 is taking another leg higher there. I think that's why the treasuries are coming back here. I'm wondering if there's a headline I missed or something. Let's just double make sure I have the news squawk turned on. I do. I'm not really seeing much out there. It kind of looks like that E-mini is just deciding to take off today because they haven't said something hot, scary enough. JP Morgan tells investors to buy the dip. Huh. Twitter is just getting too quiet now. I'm not sure if Twitter really helps us anymore. I've gone to the other apps and I don't see the people or the tools to get what you got off of Twitter, but yeah, I'm seeing the Japanese yen. So the treasuries, they came back, but the Japanese yen stayed where it was, and now the Japanese yen is taking another leg lower. How many votes we got? 9 votes. I think most of you guys that are here at least have voted. Came right back to that sell side cost basis. So it's actually kind of starting to give me signs that we've gone into a range bound market. Asking for a friend. So this thread on r/day trading. Are you trading without looking at price action? Asking for a friend. Did you ever get to what papers you need to read to get an idea of how I get the market maker cost basis? This one did not come from a paper. I wish it did, but that one actually came from a Futures.io thread. I don't think that you would be able to read it unless you had a Futures.io membership. It was like $50 one time or something like that. But the basic gist of it is you build a footprint chart. You build a footprint chart, except for like it's a footprint chart for the whole session that gets reset at the beginning of the session. Right? And then you go on the footprint chart and you kind of go both ways. You say, I'm going to start as a buyer, and I'm just going to assume that I'm always taking all of the fills. So I go, and I think that it starts at the top, but it could be wrong. Maybe it starts at the bottom. It says, okay, I've bought this many here, and then I've sold this many here. So this is how many contracts I have on. And it just keeps doing that. It goes up all the way. And then at the end, you'll see, okay, so I have this much inventory at all of these different prices. And then you get the volume weighted average of that, essentially. Then you turn around and you do it for the seller. You can do the same thing. And then while you're doing it, you're tracking how many contracts got filled. Where you had some inventory on and then it got taken off. And that's a one tick profit. So then you add up all of those, and that's how much profit you get. And then you take the cost, and then how much inventory do I still have on? And then you use that information to calculate the stop out zone. So describing it is not that complicated. Programming it was hard. It was hard to program. It's like 500 lines. Because there's basically like 3 or 4 different data structures that you have to manage in that and all those sorts of things. But you could do it by hand. You just have to get a footprint of the whole session and then go from the beginning and say, I've added this much inventory. I've taken this much inventory off. Added this much inventory. I've taken this much inventory off, and just go up. And that's how it does it. That's what I was doing. I started working on, but rather than using FP, I was trying to use time and sales data. Yeah, so you're assuming, like, what you're looking for is, like, the most extreme cases, right? So the extreme case would be that every buy-side order was picked up by a market maker that only takes on long inventory. So all of the market cells were all filled by the same market maker. And then any time that there is a limit order filled on the offer, that is that market maker taking a profit on that inventory. Yeah, so in some respects, it kind of is like a VWAP. It's like a buyers and sellers VWAP for the market, but it's like the market maker by market maker seller VWAP. But it's not just you create the footprint chart and then just take the VWAP of all of the bids and the VWAP of all of the offers. It's not that, because you have to factor in where inventory was taken off at. So what you do is you take the inventory off, you take the profits off first, and then you do the VWAP of what's left. Yeah, it got tricky because I need to track out what price they're exiting. Yeah, in this case, I'm always assuming if it's one tick above where it got the inventory, that it's taking a profit. But I guess part of what I'm saying here is that I think that the advantage and value you get from the indicator on in NinjaTrader is that I wrote it, because it's not a concept that I made up, but I was able to take my talent in computer programming and able to make it more effective. It would be very, very difficult, you know, it's very, very difficult to program. And it's very, very difficult to program it well in a performant way. Looks like the treasury's falling out there, so the robot is not doing very good. Not doing very good on this one. Now on our little, like, which project should we work on next? The NinjaTrader machine learning one might be really tough. So basically it's gonna, you know, at the end of every bar, send a server a request and then get some stuff back, and that's what's gonna get put on the chart or used however, right? And there might be some issues where, like, the backtester doesn't like it, or, you know, who knows. So that might be a frustrating project. Might be a weird project. Versus building our own platform, I'm sure that there will be some interesting challenges that come along there. CTA strategies. Well, I already have a pretty basic CTA strategy. I think one of the things would be I would probably need to spend some more money on data again. But that would be all in Python. A little bit of a buy there. Back to 20 half at least. See, like, to take that trade and it come back to the cost basis and bounce between the cost basis, this is kind of like, okay. Meh. But below that cost basis, it's like, that's flow like the exact opposite direction. You know? And it did get counter flows. This is the first, I think this is the first time I've been watching a trade from it where it caught outright counter flows. So actually, I'm kind of surprised that the market order imbalance is still above 50 after all that. Let's go back to Zero Hedge and see if there's any more cross-country monster storm leaves 40 dead. Yeah, the weather we've been having this March is crazy. It's not as crazy as like 2 years ago, but like we're getting so much snow. It's gonna snow Tuesday, Thursday, Saturday. I think we got 3 or 4 storms coming through. I guess God's looking out for me. He wants me to go skiing is what it is. That's what it is, guys. It's like, Seth, could help you find a day job. Could help your channel take off. But really what I want you to do is go snowboarding every day. So, okay, I guess I'll go do that. When it snows, at least. Of course, for me to go tomorrow means I got to get all of my work done, which means we have to record a video today about cumulative delta and finish the other video that I'm working on after that, which I got a good start on. It's not completely done. We had a tornado, came through over the weekend, wrecked the neighborhood, but luckily we made it out unscathed. Wow. Yeah. Well, it is perfect storm for big tornadoes too. Because you get these huge storms coming in, they're big winter storms, and then it's meeting up with El Nino air coming up out of the Gulf and stuff. Yeah. Huge tornadoes over a wide portion of the United States too, and like not just Kansas. Well-known AI skeptic admits he never signed up for ChatGPT. Oy. We still got an hour left, guys. It's kind of curious. I mean, this does very much look to me like, in terms of price movements, like a big move off of news that retraces and then kind of starts going sideways. You know, but I don't know. I don't know what I was saying. I kind of lost my train of thought. It did fully retrace, but like now it's just volume and cumulative delta and everything else is kind of showing me that it's just dying out. I guess it kind of means that the news in the end ends up being insignificant. So no explanation as to why it seemed to take, like why it moved so much, but probably when you go back and look at it on like a daily chart, you're not going to notice anything significant about that candle. We in pre-FOMC market conditions. That could be, you know, this is I could totally forgot that it was FOMC this week too, huh? Wednesday. Do we have any significant news tomorrow though? Building permits, housing starts. Okay. 10 a.m. became the new 9:30. Well, there was the whole daylight savings time thing, and I think that Europe is not changed yet, so you still kind of, so you get this kind of wonky period of wonky timing. Little clicky click there, but and it was right at the buyer's side cost basis. So that's kind of curious too. I think we still got a good 20 minutes before the algorithm exits, right? Hassel getting punished again? You know, it really makes me think when we're seeing all this stuff, because people are making a big deal out of Tesla going down, but you know, like Tesla has been way overbought for years and years and years, and I bet you that it's probably still too high, and you know, that doesn't really tell us what's going to happen in the long run. So is this really like Tesla is over? Or, you know, we just have to wait and see. Is it true that for an institutional trader that does swing trading, that there is the same information on the chart as for a retail? I mean, it is better for those who don't have access to order flow. Not sure I understand what you're asking at all. So I think the first thing here is you got to understand that once you're talking about swing trading, you're talking about a completely different game, because you can hold for several days, if not several months. Now all of a sudden, this sort of thing where like you can make so much on one trade that it makes up for all of the losers becomes a lot more viable, because because an asset can move so much more once you get outside of the limitation of a day, because there's a real like quantitative limit on how far it can move in a day. So a lot of well, we'd call them swing, but I would say momentum portfolios, as I've seen, don't rely on order flow data. But It's also reasonable to think that perhaps there are some institutional strategies that add the order flow data and does who knows with it. But is it better for those who don't have access to order flow? Swing style is ideal for them? Well, okay, so if not necessarily. So the issue with a momentum portfolio is that you have to have a pretty large portfolio for the math to work. Otherwise, you're not going to be able to handle the drawdowns and size the contracts appropriately and so forth. You'll come into a situation where your strategy wants you to get into a position and you don't have enough margin, or it's going to be too volatile to your overall P&L for you to take. And so you don't take those, and then that's where the profits come from, and it just doesn't work. So unfortunately, most momentum swing strategies aren't really practical for a retail trader to perform either. Yeah, this is like the third time now today. So coming in and looking at our cost basis, right? Yeah, there's this over here. There's that. That one's actually a little unusual. But you can kind of see how it was like, okay, there's the big move and retracement, and then since then, sideways. Are you tracking iceberg orders? I will watch on the DOM when they show up. I don't really care about an iceberg order outside of the moment when I'm seeing it. I don't sit down and say, oh, well, because I saw an iceberg here, this means something about the future or yada, 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 right? I'm just noticing, okay, there's a spot where I might have been able to take advantage of the iceberg. Like, how many am I generally seeing on each side? That sort of a thing. That's a perfect example of where, like, you're going to be tempted to start applying technical analysis on it, over it, right? Saw podcast, the guy who was saying don't try and compete with institutional HFTs because there's a lot of access to data that the retail one yeah. Well, I mean, generally speaking, intraday trading is very, very difficult to be competitive with. Okay. But I think that what he's probably kind of suggesting is like, hey, pick 5 stocks and just manage a portfolio of 5 stocks. That's a place where a retail trader probably has the most edge because, stocks aren't priced very efficiently and they're, they go far beyond what they're supposed to because of institutional activity. And Wall Street doesn't necessarily understand what's popular and what's, going to be making money in the future, as well as a person that lives in the actual real economy does. So there's some real edge in, managing a small portfolio, something like that. And, over here on the day trading side, trying to scalp, trying to market make, well, you're competing with robots. That's tough. So there's that kind of level of trade is not very effective. So you kind of have to go into this bizarro world where, you're taking trades that are more like 1 minute, between 1 minute and, 2 hours or something like that. Which is, the area that we kind of call the desert of unprofitability. You watch them on the DOM, but they're being processed by a market maker replenishing. Okay, so let's talk about this. So there are actually multiple types of iceberg orders. So there is a refreshing order, and that is an actual feature of the exchange. It's an actual feature of the exchange where they can say, I want to put an order that is yay big, but I only want you to show this much of it. And when you do that, what'll happen is when those orders are filled, the exchange will automatically refresh and show the next section of the order without you doing anything. And so that's where you will see situations where thousands could trade with the bid never changing. The bid literally doesn't change. And that would be a refreshing order. Okay. On the other hand, you can do it synthetically. You can say, I want to buy 5,000 contracts, but only show 50. And as those trade, then it will submit more orders to add more. And on those ones, you will see the level 2 change as it trades into it, but you'll just see them continually adding to the level 2, right? So there's two sides of that. But I'm typically just looking at an iceberg as it took an unusually large amount to make it tick up or down. You know, that's where I would look at it as an iceberg. And, you know, Jigsaw has a way of charting icebergs. NinjaTrader has a way of charting icebergs. But I don't feel that like charting the icebergs and seeing where they happened and everything is really of any use. That would be trying to apply technical analysis to order flow. I wonder. I'm going to do something with a daily chart here really quick. I'm going to add a volume on it. Where is it? Vol. And multi-ATR. Let's do it in terms of ticks. Okay, so on average, 400 ticks. 1/100th. Oh. So like if an average retail trader is looking for 4 ticks, that's 1/100th of the range. What of the volume would that be? That would be 10% of the volume. So that would be 25K. I think I'm wrong here. Somebody was saying, oh, well, there's large institutions. You're not a large institution, so you don't have to worry about the same problems that they do. But now I'm realizing, well, what is actually happening, though, is that the size of the thing that you're looking at is so small that it's like lower than the noise. No, I'm going to say there's two major problems. Should be coming up on the exit. It does look like it's going to lose. The book map has an indicator called SI that shows real-time ICEs, and sometimes there's a good opportunity to enter after a retest of an area. What the hell? Right as it exits, there's a huge buy there. That's kind of curious, isn't it? According to CME. Okay. I think that you're just talking about Bookmap has a thing that draws a little thing when there's an iceberg, right? I find that a little sus. Kind of does suggest to me, well, it isn't exactly an hour. I created this algorithm just to do like some testing, right? But it's now I'm kind of starting to see some things that makes me think that I'm in an area like something that other people are messing with, which I don't want to be. I guess there's always a possibility somebody could be watching it too, but probably not. How much was that? No, that's the ES one. Where's the... 822,000 contracts. I don't know. That's interesting. At 20. Yeah, it shows the stop order. So I've never been able to study the triggering stop orders. I think that we would have to build our own platform to study that stuff. And you have to pay extra for the data, right? That one, it's like you have to pay $100 for the rhythmic data that gives that to you, and you have to pay like $50 extra for the book map indicator that gives it to you. So it's not cheap. Today is St. Patrick's Day. Would have been great if Schumer shut the government down. Dude, it's been really funny to me to watch Reddit in particular react to that whole thing. I was really surprised that Schumer stepped up and said that they were going to do it. So here's what happened was, like Democrats set this up months ago. They set this up months ago for there to be like a showdown at exactly this time. I mean, there was a reason that they set things to expire when they did. And so when Donald Trump won the election, the plan was, okay, we're going to mire him down with a fight over the debt ceiling. And what happened was Donald Trump was able to rally the troops and pass the continuing resolution. The Democrats didn't think that would happen. In the past, you would have one set of Republicans that would reject it because, it's not okay to play around with the debt ceiling. And then you have another set that would not go because they'd say, oh, it's still too much money. And, like that went nowhere. But this time around, Donald Trump was able to get everybody to agree to it. They passed it in the Senate, everything, right? So Schumer had been planning on doing this thing the whole time and didn't think about that the situation had changed and just kind of went forward with it. And as soon as he went forward with it, all of a sudden then it was like, oh, wait, this is like really not going to work. So they backed off almost immediately. And that's why you got this thing where it was like he went in and then the next day he went back on his what he said, right? And all of the Democrat Party operatives, had gotten the sign, essentially, the sign that, okay, this is the narrative. And, they were all on there doing their thing. Like the machine was moving. And now the Democrat Party is like trying to turn the machine off and it won't turn off. That's what happened. If he had gone through with it, it would have been a real disaster for the Democrat Party, I think. As it stands now, they can just hope that everybody forgets about it, which they will. By the way, are we to... no, not quite. Oh, yes. No, we are. Now we are one tick above where the algorithm took a trade. So it does kind of feel like that it's being messed with. But I don't think that it's being messed with because of me. I think that it's being messed with because I have identified a spot that stands out too much. Now, interestingly enough...
Order filled.
Oh, of course it gets in again. And this isn't necessarily the area where I would expect it to, like, do poorly, but... I wonder... So we did the one back test where it was like, it worked really well for, like, first half and then not very well for another half. And it seemed like there was a mean reversion because of the contract ending. But maybe it's just mean reversion in general screws it up. Could be. I would really like to find a way to try and say, I do think that to try and predict what the imbalance is going to be before it happens. And, try and catch it when the imbalance is actually going the wrong way. Right? So, like, something that had bought right here at 20.5 would have been great. I guess the other option we could have had was 20.5 again earlier, so both of those would have been better than what it took, though. What's the win rate? Oh, it's like 80%, I think, actually. Yeah, let's come and look at it. Trade performance, I think, is what we got to do. I think we can just go back to the beginning of last week. Are we 17, 3? I don't know. If I go back to February, does it give me more trades? Oh, it does. Oh, okay. Wait, I thought that we only started, maybe I started even further back. Okay, so see that ES one, that shouldn't count. Yeah. There we go. When I come in here, I want to see the entry name. Okay, this is correct. This is, or at least this is the most data that we have. I do think some of these were before we changed it. So on that one, the win rate's probably not as high, huh? Oh, and so that fact, in this case, it's only 20%. But I think that if we go back to just the ones in March. Oh, 40%. I thought it was better than that. See, there was one, it was doing really good until yesterday. Oh, that's not right either. Just only 5. 1, 2. Oops. Thanks. Oh, period. Trades. Alright. Better. That's today. Today was bad. Okay, no, because there was like Friday was bad. Right, it was doing really good until Friday. Yeah, there we go. Okay, but then we can go into February, and that's where it's like, I don't know where it was. Yeah, here you go. So here's this period where it was like, oh my gosh, guys, how's it? How is it doing so well? It shouldn't do that well. I don't expect it to be wildly successful, simply because it's doing something very naive. It's doing something very naive. So, you know, it's kind of more about gathering statistical data around that situation than it is trying to make a particularly good algorithm. I'm still trying to sort out what I think would be the best way to actually play it. I wonder, so if I gone to take this back to daily, and when did this start? $225, $224. That seems to make more sense. Yeah. There we go. That looks a lot more like what has been the kind of the period since we changed it. But only 35% of the time. It's just that the ones where it does make it, it makes a lot more than the losers. That's interesting. Well, it's only 17 trades, but that is actually kind of what I expect, which is that like where the algorithm tends to get in is going to have a tendency to create a liquidity hole. So it's actually like a really bad entry. But if there is a meta order going on, and that's the point at which we can confirm that there is a meta order, and then we should be able to hold it for an hour, and there should, you know, there still be favorable excursion. And when it is, you get a lot more. So that makes sense. MFE is kind of iffy. Yeah. Favorable excursion is right. So what we have to do is we have to find a way to reduce the adverse excursion, essentially. Yeah. But that's why I'm saying, what if we told it something like, here's an imbalance long, wait for it to come back to 50%, which would happen right here, and then get in. Right? Well, if you did that, there was still this excursion against you that I don't like. So actually it has to be, I get triggered that there is a meta order going on. I wait for the imbalance to normalize again. And then I wait for a good buy bar like this one right here. At least in this situation, that would have been the best way to do it. In this case, if we had held it for longer, it would have worked, right? But it's a time exit, and that's the other thing. In this situation, could we have said, okay, here was like a good buy impulse, so extend the amount of time we hold it or something like that? So you hold for an hour, which seems, how about you set a take profit? Because if you set a specific take profit, then the results that you get are mostly about that take profit. Right? Like, prices are martingales and are going to follow a distribution in accordance with regular volatility. And so if you have a set stop and target, then the results that you get from your algorithm are going to be mostly about that set stop and target rather than about your entry signal. So in order for the algorithm to tell me the most about my entry signal, I want to use a time-based exit. That will give me the most pure, that will kind of turn that will turn the profit side of, like, the MA and MFE side of the equation to be in line with the volatility. And so what I really can say is, does this entry signal effectively predict order flow over an hour time period? You can see that over a short term it doesn't, right? If it was a 2-hour time period, I actually think that every time that it's done well, that 2 hours would have been even better. So what can I say? I don't know. At the same time, what we really want our results to look like is like this. Whee, right? Like we really want to maximize that right tail somehow. And if you have a set take profit, then all you're doing is going cutting it off, right? Well, if I have it time-based, then I'm also kind of limiting that right tail by the size, by that time period or whatever, right? So that's where I really like this idea of like when certain things happen, it extends the time, you know? So that there's a possibility for a really, really long tail where you hold it all the way to the close or something like that. There's also this other thing, which is like, what price does it get? And should it try and use limit orders to try and optimize that and stuff like that? There's some other things. So I think there's lots of things that we can do. I do think that we've seen enough that to kind of see the things that we wanted to see, that we can now kind of start to make a more serious algorithm out of it. I'm not entirely sure how to do it. Because I still think that the key is that you have to have a reason to expect an imbalance before it happens, rather than saying, because basically at this point, what this algorithm is doing is it's saying this is the point at which an imbalance is certain enough that like the market and the market makers know it, essentially, right? So we have to find a way of identifying that an imbalance is coming before the rest of the market's figuring it out. Then we can avoid this whole thing. Does seem to work well if it's a trend day, though. So I don't know. But I think something that if I could say, I think that the imbalance is going to be long today. And the problem is that the way that I do that is the discretionary part, because I don't have enough stuff to... Maybe when we sort everything out with machine learning, we could get something better. I don't know. But just the fact that there was like a strong bid, like, and then it went up exactly after I got out, kind of suggests to me that it is that we did pick up on a place that the market cares about. Not that we picked up on an edge, but that we picked up on a place that the market cares about. The problem is just that that place is probably like good for an exit or for a continuation, but not for an entry. Yeah, the machine learning can lead to extreme overfitting because you have many degrees of freedom in yeah. 100%. See, I have been unable to find literature. The literature that I have read about machine learning type stuff doesn't talk about these things. But, you know, from what I understand of Nassim Taleb, once you add extra dimensions, you know, the number of data samples that you need goes up exponentially. So I can't really just pass all of the data that I've, you know, all of the features that I've got and then hope that the machine learning sorts it out for me. There's got to be other methods and techniques that I'm not aware of to avoid the overfitting. And I'm sure that there's a book that helps us, but I haven't found it. The book that I have on machine learning is way too technical and is really about helping you understand the math behind the machine learning methods rather than actually using them in practice. Instead of a machine database? Well, yeah. See, the way that I predict which way the imbalance is going to be is I'm like reading the news and all of these sorts of things. So maybe we could make an LLM that does this? I don't know. It seems like something that should be possible, but I'm just not sure if it's possible with our resources, you know? Okay, you studied machine learning. Oh, okay. I studied machine learning and wrote my thesis about it. In my opinion, it's great for predicting the predictable, but it is bad for random, so day training is unfortunately. Well, okay, but I think that is too broad of a statement. Because everything that I've read is that there's some tools are good at this thing and some tools are good at this thing, and what happens is that people will apply the wrong tool. Actually, let's see, what does this one do? Sequence modeling, probabilistic sequence modeling, advanced neural networks, reinforcement learning, inverse reinforcement learning. I don't know. I do think one side of it, and that I haven't seen other people do, is that there is a lot of noise in price. So if we are using cumulative delta and we're basically using reinforcement learning to try and predict cumulative delta, that should help. I still kind of wonder if existing market data is not going to be very effective at predicting cumulative delta. That like past cumulative delta and what we're seeing in the book and all of these sorts of things might not be very effective at predicting cumulative delta. Yeah. Point is that if you expect to throw in all the parameters and let machine learning find the optimal one, yeah. But the issue is that I guess the problem that I'm trying to solve is that I have a bunch of things that seem to matter, but I'm not sure how you combine them together into a coherent setup for the algorithm, right? That's what I'm trying to sort out. It seems like that would be a good use case for a neural network using reinforcement learning. But I've never messed with it. You can find out which parameter matters. Well, yeah, okay, that's another thing. But it's actually what I'm kind of more interested in is like, you know, is there some sort of a hidden Markov model sort of thing where when this indicator is like this, then you want to look at this thing? Well, so like a better example is like, okay, this imbalance along, or rather when the market order imbalance reaches over 55 or reaches over 60 or whatever threshold you want to set it to. This is an area that we're interested in, but we want to go long on a continuation in these conditions, and we want to go short on a mean reversion in these conditions. And can the machine learning sort out that there is actually some sort of hidden Markov model underneath that gives us a good explanation for when you want to do which, essentially. But I think that the first thing would be just getting it to work with NinjaTrader, right? Have a server that talks to NinjaTrader through a socket, and you pass the features that you want into the model, and then it updates and gives you a prediction and or like a certainty number. And then based on what it returns back to you, the algorithm decides to trade or not trade. And or it also passes information about the reinforcement, whether that trade worked or not. And we would want to do it with like the most simple of things to see that it works. And then it would be, okay, now you can take it from there and use whatever kind of model you want, and right. Well, the thing is, the large institutions already exploit the insight of machine learning, and they have faster. Yeah. But you don't think that it's possible in all of that there's going to be an inefficiency you can find that they haven't, or that they ignore because it's inconsequential to them? I don't know. Yeah. Now, another side of it is, well, maybe part of the problem is like, maybe I do have an edge on these things. Like I have an informational edge, but like the execution is not good enough because I don't have these things. And if we add these things, then that would bring that part back up to par. And then the larger informational edge would be able to shine, you know? But I guess, you know, like, why haven't we done the machine learning stuff before now? Well, problem number one was that there was some issues with the order flow indicators and the caching, preventing it from being used in a backtest. We have solved those problems. Then the other issue was I don't know enough about using machine learning to know how to apply it correctly. I do kind of think that all I would do is overfit a model. So how do I deal with that? Oh, I have to find a book. But it does seem like that's what you guys are the most interested in. You're more interested in that than building a platform. But I might just decide that I want to build a platform and just do that one anyways. Well, the other side is that the NinjaTrader machine learning thing is maybe not that huge of a project. So. But I don't think, Frederick, that you're saying, oh, don't bother making it, right? I think that you're just saying there's like some big pitfalls with it, and I understand that. I think that what I want to do is I want to go and take the naive approach to create something that works. And then we can go and try and find more information to try and build something that's effective. I have seen, you know, and this is also where we can get into things like, you know, like turning all of the order flow changes into a word and passing that into a large language model and trying to get predictions out of that, because there's been some research on that was really, really interesting, right? We should be able to make that sort of a thing at that point. And I don't know. What you need to get your head around is you can find correlations. Yeah, well, so not even correlations, but like relationships, right? Because you can, it does all of these things like, okay, what if I say this is linear? What if I say this is exponential? What if right? That's one of the things that I understand that the nodes do with things. But I'm more interested in the conditional nature of it. That it's correlated this way when these conditions are met, but it's correlated this way when these conditions are met. Something that is too complicated for our human minds to sort out, but that the robot might. You need a databases which no one else has. Yeah. Now another thing is that what if you just come in and you say, I think my bias today is long at the beginning of the day, and it factors that in as well. That's something you could do. But how would you get historical data for that? So, but that's kind of where I think that like the ultimate algorithm would be. Oh, wait, what's going on with this? The cost basis did something I've never seen before. Oh, because I'm looking at ES. Okay. The treasury is a little different. Okay. See, in my book, from here on, it's just like, oh, I'm not even showing it to you guys. Hurts. In my view, like as soon as we get to this, like it's in mean reversion land, I'm instantly less interested in it. So, taking another trade right here, I don't know if that really makes sense. But databases, which is at least rarely anyone has, as a change in the DOM. Well, okay, so if what you're saying is, or maybe put it in the terms that I understand, I need to have a unique feature that I'm passing into it, right? Like your features are like data series that it's doing stuff off of, and you can do stuff like, okay, here's like the price, but I also think or know that this particular thing is useful or matters, so I can also pass it in some average or whatever the deal is, right? I can do filtering and computations on that data, and each of those are a different field that gets passed in. So I do have features to pass into it that I think are unique to us, yes. But those features are still are derived from data that everybody has. I would also like to find ways of incorporating data that is out there on the internet, but that like algorithms aren't necessarily able to factor in. I don't know, and I think you could even do it historically. I don't know. But now you're talking about something that goes beyond the abilities of the LLMs. The LLMs do not have enough memory and everything to do what I'm talking about. I kind of think that if you had stronger ability to customize a GPT that's running not a local one, because I do think you would need the compute power and everything of like the flagships, right? An LLM that you can personalize and that gives you a lot of memory for context and has like unrestricted access to the internet, then I think you could start to train something that like looks at all of the financial news and everything that's going on and is able to predict order flow. A replenishment indicator. Okay, so that is, but is that just based on price, for instance? What data is it using as input for that indicator? What is the inputs to the replenishment indicator? Because when you said like rare data, I thought that you're talking about like that the base origin is stuff that not everybody has. Right? Like for instance, like I think probably the best example that I can think of is open interest. If you had 1 minute open interest data and nobody else has that, that would probably be a pretty big deal. You could probably use that in an algorithm to much effect. Yeah, DOM versus order flow. Okay. So that's similar sorts of things then. Yeah, okay. Well, I think I hoped that build your own platform would win, but after 23 votes, it does seem that you guys want to do the Ninja Trader machine learning bit. So I guess we will start messing with that tomorrow. All right. In the meantime, I guess I already kind of have something that sends a socket. So what I really need to do is get something that's like a really simple Python model that's like updating everything. I don't know. Well, we'll see. But we can mess with it tomorrow. I will see you guys then. In the meantime, stay excellent, team.